Let's get Vijay Bhamwani, who's author and CEO at BSPL India, who shares the key triggers for the day within the currency markets as of now. Vijay, what's your sense? I mean, we have seen lots of action coming in for the US dollar and the Indian rupee, and it has seen a lot of movement versus other currencies as well. What have you picked up in sense of currency today?
Manisha, I'm pretty pleased that the dollar spiked up because for a while now I've been talking about how before the end of March there is a fair probability of the USD INR basically aiding the bulls. Now what you have seen is the monetary tapering of the US and the possibility of raising interest rates, seeing inflows into the United States currency. What you are also likely to see is some amount of volatility in the JPY INR, and you are also likely to see a bear covering in the USD INR. It's reflected by the fact that open interest has gone up in the USD INR, which tells you that long positions have also got created. So my guess is in the coming one or two trading sessions, not only will the longs start to add up, but they'll also force the shorts to get squeezed, thereby raising the prices of the USD INR probably towards the 62 or 62.20 levels in the prompt month future series on the NSE currency derivative segment.
Clearly, and there has been an increase in the volumes also on the derivatives market there. Well, the US Fed has trimmed its quantitative easing program by another $10 billion, reducing its monthly purchases to $55 billion. The new chair, Janet Yellen, surprised the markets by saying that the time between end of bond buying and rate increases could be around 6 months, which is earlier than many expected. And this has sent most emerging markets lower, including the Indian rupee, which also saw some slippage in trade. Let's get on board then Ajay Marwa, and he joins us. He joins us as well in a few minutes from there. But let's take a look at the Indian rupee first. And you have seen some declines coming in for that today. We did see a low of 61.36. As of now, also the closing has been more than 0.5% on the lower side. Remember, the rupee was trading nearly 1 week highs in the markets yesterday. It is trading at a 1 week lows on the closing basis there. Well, the bond buying purchase program also has impacted many of those commodities where you saw the gold and silver prices decline quite sharply. The other emerging market currencies saw some slippage as well. In the other currencies, you have seen the euro, which has declined quite sharply from 1.40 kind of levels to around 1.38. Vijay, how would you look at the euro right now?
Manisha, I think the euro versus the INR is likely to remain either sideways to marginally under pressure. I would start to get bullish on the euro under two circumstances. A, against the USD, if it starts to go beyond the 1.3975 levels, or against the INR, it starts to trade well above the 86.20 levels with higher volumes and open interest expansion. Till then, I think I would lay away from the euro and the British pound.
The dollar is trading quite on the higher side right now, 0.25% up on your screens, and the declines in the rupee quite clearly there. Ajay, hi, thank you so much for joining us. How have you made out what the Fed said? Of course, the $10 billion were pretty much factored in. It really is the interest rate guidance that comes in from Yellen that really seems to have spooked the markets.
Absolutely. I mean, the guidance is pretty much slightly more aggressive than the market kind of factored in. But I think it's important to understand that this is an event that may take place more than once. I mean, we are into a situation where the US Fed will continue to withdraw accommodative monetary policy. That withdrawal of accommodation is going to be based on data. And quite frankly, nobody can beat that data. So they will continue to modulate the speed at which they withdraw this accommodation. I think the market, this is only one of a series of such shocks that the market will see. But more than everything else, what is important to understand is that the trajectory of these steps will continue to be hawkish in that sense and very positive for the US dollar. So we have to now understand that we live in an environment where over the next 3 to 5 years, you are going to see a stronger dollar. You are going to see much better numbers out of the US economy, and everyone from the G3 economies to the emerging markets have to brace for it.
Ajay, I know I'm throwing this to you from nowhere, but there has been a report from Citi which says that the rupee may touch 40 in the event of a Modi government, or rather let's call it a stable government coming in. Would you give it so much to elections, or as you said, the economy, the next 3 to 5 years in sense of those data would be more important?
I think the data is far more important than conjecture, if you ask me. I think it's very important to understand that the rupee is where it is not because somebody is dictating it, but because of a set of flows. Quite frankly, at this point in time, given everything that we know, it's very, very difficult to see the kind of numbers that you are saying. It is important to understand that there may be improvements in the fisc, improvements in the external account. There could be an exacerbation of foreign inflows. All of those could act together, and there could be some appreciation in the currency. But overall, in the macro, looking at from a macro perspective, it is an environment globally where the dollar is going to be stronger. So in that environment, to expect the rupee to actually go and strengthen beyond a point, I think at the moment is a little far-fetched.
Ajay, while the kind of consolidation or the stability that we are looking at the rupee, I mean, given the kind of news that we got from FOMC and compare it with what happened in last year in the month of May when the first news of Fed did come in, 0.5% of a movement isn't really more than a knee-jerk reaction. Going forward, where do you see this quarter ending, and how do you see the next quarter now in sense of the rupee?
Yeah, I think there are a phenomenal number of fundamentals in dollar rupee which have improved, and they have improved dramatically. Our own current account looks very different than it did in May last year. Our projection of the current account going forward looks also extremely different. There are, however, important things to factor in, things like gold imports. There is a lot of talk that gold imports will be freed by the new government as and when it comes in. The flip side of that, obviously, is that if you free up gold imports again, you're going to have a current account which will not look the way it is looking now, and you could add another $20-odd billion to it. So it really is going to depend on how all of these things pan out. My own sense is there is no point painting to, an exaggerated picture on either side. I think the good news is that in this entire move, in the last couple of months, etc., we've seen a lot of debt flows come back from the FIIs. You should expect the equity markets also to kind of be reasonably performing in the interim between now and the elections. And given all of that, the currency should remain more or less stable. So I don't think, at this point in time, we should be looking at a range of beyond 60.5, 62.5, let's say, even far-fetched. But this is all subject to what happens to the dollar and incrementally what kind of shocks we see in the US.
Just one final question, Ajay. And would you give Fed and the US economy more importance, or do you think it's going to be the Indian elections going forward making more noise for the currency?
So I think that's a tough question, but given the fact that the US noise is here to stay and the markets have factored some part of that noise in, I think the elections, the outcome of the elections and the policies that come forward from whatever new government comes in will perhaps have a slightly larger impact than exactly what happens in the US.
Ajay, I'm going to squeeze in a quick question yet again, and this one is on dollar. When you say that dollar is going to be the firmer currency from here on, what kind of levels are we working about?
So, I mean, you should expect, I would say, between 3 and 5% appreciation in the dollar in the near term. This is, of course, subject to what kind of data we see coming out of the US. And the expectation at the moment is that that data looks as if it continues to be positive. You also have to look at, how the Fed continues to react to that data. I think at this point in time, it's very clear that they're focusing more on unemployment, and they're looking at positive pictures on that because unemployment has reached very close to 6.5%. So some of these parameters really you have to wait to see how they pan out. But overall, I think the dollar should be between 3 and 5% stronger in the near term.
Ajay Marwa, we'll let you go at that. Thank you so much for joining us and giving us a sense on the currencies. So today has been a day of knee-jerk reaction for most asset classes, including the rupee as well, which has seen more than a 0.5% cut coming into the markets. Would be interesting to see how most of the other asset classes open up the day tomorrow.